Hello everyone, welcome to our next topic, which is about the flow of manufacturing costs. What you will be learning in this video is more on how to record manufacturing related transactions, which is essential in understanding the behavior and connection of each account. In this video, I'll be talking about sample transactions and its corresponding journal entries. So first is on materials purchased that is assumed to be received in account. So similarly, like in basic accounting, the journal entry with that would be to debit materials and to credit accounts payable. So if it's not received in account and paid in cash, so you just simply replace accounts receivable with a cash account. So how do you record materials requisitioned for the month? So it means the materials used for the month. So if it's used for production, definitely it will be under work in process. And of course, as like what I've said in the previous meetings, indirect factory use will be recorded under factory overhead. In this case, the account code for factory overhead is factory overhead control. So debit work in process, that's 80,000. Debit also factory overhead control, 12,000. And then you credit the total number of materials used, which is 92,000. Now, there are times when we refer to materials as simply materials, or we can also consider them as raw materials. Okay, so don't be confused in the account codes that are given to you. Just look at the entirety of the problem. Okay. So another transaction that may pop up is you being given the total gross payroll and assuming that in this case a payroll was accrued and paid. So there will be two entries. So first, you record payroll as is, similarly to that of how payrolls are to be recorded. So you debit payroll and then you credit accrued payroll. Now, if that was paid up, of course, you just debit accrued payroll and you credit cash. Now, if the distribution for the payroll is already given, like in this case, direct labor is 65%, indirect labor is 15%, marketing issues is 13%, and administrative salaries is 7%. So you multiply 160,000 by 65%, 15%, 13%, and 7% respectively. So direct labor is directly attributed to work in process. Remember, the total manufacturing cost involves direct materials, direct labor, and factory overhead. Factory overhead is, what do we call this one? Being recorded separately, and we will talk about that furthermore in the further topics that we'll be discussing. So that's why indirect labor is recorded separately in a factory overhead control, while direct materials and labor are directly attributed to work in process. Okay. For marketing issues, you can create a marketing expense control so that you can lodge all marketing related expenses to your production to one specific control account. Similarly, that will also work to administrative salaries. And then of course you just credit payroll. If you look at it, there would be no double take up of accounts because the payroll expense would then be zeroed out and transferred to the inventory accounts, which is work in process, okay, and to other expense accounts. It's just it's like you're reclassifying it according to the nature. So inventory accounts and the respective expense accounts. So you reclassify it accordingly. Another transaction is if you are going to journalize an entry relating to factory overhead relating to depreciation and prepaid insurance. You record depreciation because there is an existing property, plant, and equipment. So more or less that's accumulated depreciation, and you record prepaid insurance because you have paid in advance in insurance but have not you have not yet expensed that one. In normal circumstances, you debit prepaid expense, credit prepaid insurance, or debit depreciation expense, credit accumulated depreciation. But since this is related to factory overhead, the debit would now be factory overhead control, credit accumulated depreciation, and credit prepaid expense. Okay, you're simplifying it. You're recording it directly to factory overhead instead of going into the normal expense accounts of these specific account codes. So what if the general factory overhead costs 26,340? 70% is paid in cash while the balance is credited to accounts payable. So you just simply debit factory overhead control, which is 26,340, and you credit cash. That's the 70% of the total general factory overhead is 18,438, while the remaining 30% is the 7,902 pesos. Okay, so that's just multiplying it of what is given. So please bear in mind to actually read thoroughly the problem and understand the distribution of the costs. Okay, so that you will get the right answers, because regardless if you get the right pro forma entries but you got the amounts wrong, that would still be considered as wrong. Okay, so how about those amounts received from customers in payment for their accounts? So similarly, that's just debiting cash because you received the money already and crediting accounts receivable. So it's basically like what you've learned in basic accounting. We are just adding something up in terms of cost accounting. So how about if several liabilities were paid? So similarly, so you just debit accounts payable or income tax payable or whatever payable account that is related to the payment, and you simply debit credit cash or whatever cash account code is given. So for factory overhead, for example, this one, factory overhead accumulated in a factory overhead control was charged. Okay, sorry for that one. That's I double written that one. Was charged to the work in process account. So just simply debit work in process and credit factory overhead control. So you're transferring because in the previous slides, I've shown you that there are several items that can be recorded under factory overhead control. Now, at the end of the month or at the end of the year, you take out all the accumulated factory overhead control and you transfer that one to the inventory count, so that the cost in relation to factory overhead would be transferred to the inventory, so that now your work in process would be complete in terms of the materials, labor, and overhead. For that one, there will be several ways to do that, which you will learn along the way throughout the semester. So how about if it is already completed and transferred to finished goods? So remember, all the basic accounts in the total manufacturing cost, which is direct materials, direct labor, and factory overhead, are now in the work in process, and you transfer the work in process to finished goods. So you reclassify the work in process to finished goods by simply debiting finished goods and crediting work in process. Okay. So how about if the sales is 384,000 and 40% of that is cash, and the cost of goods sold is 75% of sales? So sales, of course, the normal balance for sales is credit. So you credit sales and you debit cash 150,600. That's 40% of the given. And accounts receivable, 230,400, which is 60% of the given. And for your cost of goods sold, you recognize that one by debiting your cost of goods sold, which is 288,000, and you credit finished goods, which is 288,000. In effect, you are deducting your finished goods inventory because you have already sold that one. Okay, so it's just a movement, and at the same time, you're giving a valuation to your respective inventories. So what if you're also given a provision for income tax of 26,000? So you just debit provision for income tax, which is an expense account, and you credit income tax payable. Okay, because you're still providing it. You're not yet paying that one up. You learn more about that on your uh, tax subjects. This is the formal pro forma of a cost of goods sold statement, which I have always emphasized that you should familiarize by heart, as this is one big formula that will come in handy when you're taking your board examinations in the future. You will always encounter this even during your strategic cost accounting or managerial accounting services. So this is the good form. So heading company X, cost of goods sold for the month ending. So this is for a specific period. This is not as off. Always take note of that. So as you can see here, okay, it's okay. As you can see here, direct materials, direct labor, and factory overhead. Again, that takes up your total manufacturing cost. In this one, this is specific as to how you will be able to derive your direct materials. So this is referring to your inventory. So raw materials inventory beginning, you add up your purchases. So now you will have your materials available for use. So you just deduct, you add up the indirect materials used and the raw materials inventory end, so that you will be able to deduct how much was used during the period. How much is, okay, pardon for that one. Again, you just add up the indirect materials used, because you should not take into consideration that one for the direct materials used, because it would be recorded under factory overhead. And you take out what is left of the raw materials inventory. So if you deduct that one, you would get the direct materials that was consumed during the period. Okay, and then you add up the direct labor and you factor overhead. Again, you get your total manufacturing costs. So this is actually also your work in process. So you add up the work in process at the very beginning of the period. So that is the total work in process for the period. And if you deduct what is still being worked on at the end of the period, you would get your cost of goods manufactured. So this is actually referred to finished goods already. So these are the transferred goods from work in process to finished goods. So you add up what is how much is the inventory cost of the finished goods at the beginning of the period, and for you to be able to get the cost of goods available for sale. So during that period, you were able to get how much was available for sale at that time. You just deduct whatever is left of the finished goods inventory, and then you get your cost of goods sold. Okay, so again, please memorize this by heart and go over this so that you will be able to understand further cost accounting. You'll be able to understand more of cost of accounting if you memorize this by heart, okay? So for cost system, we will go further into cost system, which is an overview of the several topics that we'll be discussing for the rest of the semester, okay? So cost systems. So an actual cost system, this is referring to cost information that is actually accumulated as cost is incurred. but the presentation of results is delayed until all operations of the accounting period have been performed, or in a service business until the period services have been rendered. So this is actual cost, okay? Like what the name itself is, actual cost. Standard cost system, products, operations, and processes are costed based on predetermined quantities of resources to be used and predetermined prices of those resources. So in the standard cost system, which we will be tackling more later, you will be able to do analysis of predetermined rates. So it's much easier for costing to give costing of inventories that way. But again, there will be analysis that needs to be done before you will be able to get the predetermined rates. Okay. Absorption costing. So this states that all costs allocated to units of production may include all manufacturing costs. So that's direct labor, direct materials, direct labor, and factory overhead. There will be a separate discussion for absorption costing. So we will talk more about that later on. Direct costing or variable costing. So the costs allocated to units of production may only include the variable manufacturing costs. Both of this will have their own individual topics later on. Similar to job order costing, which will be the next topic after this one, these are costs that are accumulated for each batch, lot, or customer order. Okay, again, costs are accumulated for each batch, lot, or customer order. While process costing is that this is accumulated cost by production processes or by department. Again, these topics have their own, what do you call this one? Their own sets of topics in the future. Blended methods. So this, in some manufacturing, different units have significantly different direct material costs, but all units undergo identical conversion in large quantities. In these cases, direct materials costs are accumulated using job order costing, and conversion costs are accumulated using process costing. So this is a this is a mix of job order costing and process costing. And lastly, the backflush costing, which is a workable way to accumulate manufacturing costs in a factory or part of a factory in which processing speeds are extremely fast. So timing is significant in this specific costing, and there is a specific topic again for this one. So this is the summary. In comparing the four main cost system, their key differences and similarities. You will be able to further appreciate this table as you complete this course. So job order costing, again, it's very specific. It refers to specific batch, lot, or contract. And then all cost elements may differ, and the level of detailed accounting work for this process is very high, which you will actually agree on as we go over job order costing after this topic. And the source of information is financial and physical data recorded. So for job order blended and blended method and process method, all of which are referring to financial and physical data records, while backflush refers to visual observation. For the blended, again, this is a mix of job order and process costing. So you should keep that in mind, and that material may change for each job, and material may differ dramatically, while conversion may be by only small degrees. So for process costing, so this is like a process, it's like a normal batch production, same line of products that are being processed and just transferred to one department to another, thousands or hundreds of thousands of units of output. So again, this is very, very similar, and all costs may differ by a small degree. And as compared to job order and blended, the amount of detailed accounting work for this is summarized for each department or process. Okay, so again, you'll be able to appreciate this table as you complete this course or as we tackle each and every cost system along the way. So this is the exercise that I've actually posted in our Google Classroom. So as you can see here, this is actually referred to in thousands, this trial balance right here. So we have cash and marketable securities, accounts and notes receivable, finished goods, work in process, direct materials, property, plant, and equipment, accounts, notes, and taxes payable, bonds payable, paid in capital, retained earnings, sales discounts, interest, revenues, purchase of direct materials, direct labor, indirect factory labor, office salaries, sales salaries, utilities, rent, property tax, insurance, depreciation, interest, expense, freight in and freight out. So additional information would be 80% of the utilities cost is related to manufacturing cable. The remaining 20% is related to the sales and administrative functions in the office building. So more or less this refers to factory overhead. All of the rent was for the office building, so definitely there's no share of the factory in the rent. Property taxes were assessed on the manufacturing plant, so in this case the property taxes would be part of the factory overhead. And 60% of the insurance cost is related to manufacturing cable. The remaining 40% is related to sales and administrative functions. So for the insurance cost, you need to multiply 60% of that for us to get the factory overhead share. And depreciation for the month is as follows. So manufacturing plant is 20,000, manufacturing equipment is 30,000, office equipment 4,000. Inventory balances are as follows. So finished goods is 175, work in process is 210, and direct materials is 23. So what is asked here is for us to prepare a cost of goods manufactured statement for Wallace Industries for May 28. So let's get my pen. Okay. So the name of this is Wallace Industries. So let's put it right here. Hopefully my handwriting is okay. Wallace Industries. So for me, sorry for that one. For me, 28. So in thousands of dollars. So I'll just write here. Okay, before we proceed, let's identify first the items that are actually needed for this specific problem. So we are going to make a cost of goods manufactured statement. So what we need here is the work in process. Okay, we need the work in process. So I think this is the beginning. We need the direct materials. We also need the direct labor, the indirect factory. While the rest we need to compute, we need to look back at what was the additional information. And the freight in. So let's compute first our direct materials used. Okay, I'll use another color. So for the direct materials, okay, so for the direct materials, we need the direct materials beginning. I'll give it a shortcut. Okay, so direct materials beginning is this one, 28. And then purchases. Purchases is, where are you? Okay, let's look at the purchases. 510. Oh, here it is. Okay, so that's 510. And freight in. So forget about that one. I think you asked about this one. How do we account for freight in? So this is my answer. So you can't hit under direct materials. So that's a total of 525. So this is the direct materials available for use. So you just add 28 and 525, so you get 553. And then based on the additional information, the work in process end, I'll just use WIP. Okay, sorry for that one. Not WIP. We call this one the direct materials end. Let's put DM end is at 23. So let's less 23. So the direct materials consumed is actually 530. And then our direct labor, as indicated in the trial balance, is, how much was this? This is 260. Okay, 260. And then let's compute for the factory overhead, FO. So factory overhead, let's base that one on the additional information. So first is, we'll first record the indirect labor. So indirect labor is equivalent to 90. Okay. Your utilities, where's your utilities? That's 135. It says here that 80% of utilities is related to manufacturing. So we multiply the 135 multiplied by 80%. Okay. Okay, so let's proceed. So 135 multiplied by 80%, so that's 108. Property tax. So all rent, so you don't recognize rent. The property tax were assessed on the manufacturing plant. So there's a property tax. So the property tax amounts to 60. So let's include that one here. And then your insurance is 60% related to manufacturing costs. So let's put insurance. So 60%. Where's your insurance? That's 20. So that's 12. And then your depreciation. The manufacturing plant was 20, manufacturing equipment is 30, so depreciation is 50. So the total factory overhead is 320. So we add this 3 up. So this is our total manufacturing cost. So 530 plus 260 plus 320, that's 1,110. And then we add up the work in process beginning. That's work in process beginning here is 150. So you just add that up. So this totals to 1,260. Okay, let's continue here. So your work in process end is, according to additional information, that's 210, so you less 210. So 1 to 60 less 210, so that's 1050. So your cost of goods manufactured is 1050. So it's very helpful, again, like what I said earlier, for you to memorize the complete pro forma of the cost of goods sold, because regardless if you're looking for the cost of goods sold, cost of goods manufactured, or the available finished goods available for sale, you will be able to get that one from this specific pro forma. Okay, so again, practice and practice until you memorize this pro forma. Okay, so thank you everyone, and try to practice this once again. Thank you.